In the mid-1930s, as the United States remained paralyzed by the Great Depression, Great Britain appeared to be pulling off an economic miracle. Hundreds of thousands of new, privately owned homes were sprouting up across the country. A comfortable, property-owning middle class was taking shape, driven by a surge in domestic construction. But in October of 1936, 200 men stepped out of that booming economy and began to walk. They left the northern industrial town of Jarrow, carrying a banner that read Jarrow Crusade, and headed south toward London. For nearly 300 miles, they walked through pouring rain. They weren't asking for handouts. They were marching to Parliament because their local shipyard had been closed, and they wanted the right to work. It raises a question that still haunts national policy. How does a country celebrate historic growth in national output while a significant portion of its workforce is literally starving? The catalyst for Britain's recovery began in 1931, when the government decided to leave the gold standard, the system that tied the value of the British pound to physical gold. Breaking that link gave the Bank of England the freedom to drop its central interest rate to a low of 2%, where it would stay for nearly 20 years. This created a period of cheap money. By making it inexpensive for citizens to borrow, the government triggered a surge in private mortgages and consumer sting. The visible outcome was the 1930s semi-detached house. This frenzy of home building drove consumption and created thousands of construction jobs, keeping property prices stable until the early 1970s. This monetary strategy successfully inflated the national GDP, but it concentrated new wealth almost entirely in the South. This growth masked the reality of what was happening in traditional industrial regions. Up north, in Wales and across Scotland, the mighty Victorian industries that built British wealth were now failing. The coal industry was in a period of stagnation, global export markets had dried up, and because mining remained highly labor-intensive, the pressure to cut costs fell directly on the miners' wages and hours. Shipbuilding faced the same decline. As world trade conditions changed after the First World War, massive yards fell silent, leaving entire communities without their primary source of income. Looking at the data, a geographical divide emerges. Housing spiked in the South, while northern industrial output fell. This was deliberate corporate policy. Take Palmer Shipyard in Jarrow. A government-backed entity dismantled its machinery and placed a 40-year ban on construction to protect competitors. When a private investor later tried to build a modern steelworks on that site, a corporate cartel blocked the funding to protect their own monopoly. These specific policy decisions, not just market forces, trapped these towns in poverty. When the people of Jarrow asked for help, the government told them they must work out their own salvation. In response, the town organized the crusade. After a month on the road, the men reached London. They carried a wooden box containing an 11,000-signature petition, asking Parliament to provide work for a town that had been industrially dismantled. The petition was received by the House of Commons, but it was never debated. The men were given their train fare and sent home, sent back to the north without a single promise of government intervention. The marchers returned home to the same reality they had left, massive crowds queuing outside unemployment insurance offices. They went home believing their historic effort had been a failure. The government's indifference confirmed a shift in national priorities. In a property-driven economy, the survival of northern industrial communities was no longer a central concern for the Treasury. The 1930s marked the moment Britain moved away from its 19th century dependence on coal and heavy exports. In its place, a domestic, property-based economy took root, where growth is measured in mortgage approvals and suburban expansion, rather than industrial tonnage. The Jarrow marchers failed to save their shipyard, but they provided the public with a human image of industrial poverty that housing data alone couldn't convey. Historians note that this memory of 1930s inequality shifted the British conscience. By the 1940s, avoiding a return to this level of mass unemployment became a primary goal of the reformers who designed the post-war welfare state.
The ultimate lesson is that rising national GDP can be a dangerous illusion if the policies driving it are simultaneously dismantling the foundations of working-class communities.